Silver spot price weakness, especially over the past month, this July 2022, has only added to increasing physical silver offtake and demand pressures worldwide. Global silver mining supplies are just not keeping up with ongoing demand, so silver is being sucked at premiums from places like London and silver Comex warehouses. Since the early 2020 pandemic-driven gold and silver bullion shortage arbitrage, and then the late January 2021 Reddit Wall Street silver squeeze phenomenon kicked off, the persistent demand for physical silver bullion has had near no letup, spiking in strength, especially when silver spot prices fall as they have recently. And this is confirmed by ongoing data. Supposed silver warehoused in London has not been at levels this low since early 2016, having now rolled over nearly negative 200 million ounces from its peak just after the silver squeeze kicked off in earnest early 2021. To better break down the silver bullion bar hoards supposedly sitting in London, one needs to first acknowledge that the vast majority of the London silver supposedly held there is done so for unsecured ETF and ETP silver trust holdings. BullionStar's Ronan Manley this week pointed out that about 2/3 of this gray matter on the chart is supposedly SLV silver. That's the world's largest unsecured silver ETF, or exchange-traded fund, whose custodian is none other than criminal RICO precious metal spoofing bank called JP Chase. Of course, if you've been following along over the last few years on this channel, you likely recall too the ridiculous SLV prospectus change in early 2021, where the trust basically told its unsecured shareholders, who own nothing but a price-mimicking derivative when they own shares in the ETF, that from then on, the silver ETF SLV might not be able to get silver if global demand gets too strong. In other words, basically good luck, as you underperform virtually any piece of silver bullion owned directly by investors around the world. What actual amount of silver bullion can actually be acquired and pulled from this aqua-colored section of this London silver warehouse pile is unknown. But I'd bet strongly that it's much tinier than this chart gives off. But for devil's advocacy, let's just say the supposed reported silver bullion inventory float in London at the moment, which is supposedly around 10,000 metric tons. That's just over 321 million ounces of silver bullion. The nation of India alone, when their silver demand remains persistently high as it's been this month and last, that amount, 321 million ounces, could be taken in just over a year running. Turning to the North American Comex side of this 1,000 ounce silver bullion bar offtake equation, this week we saw a massive amount, nearly 5 million ounces of silver, leave the deliverable registered pile into the not up for potential physical delivery eligible pile on the Comex silver side. You can see the dark green line cascading downward here in the bottom right of the chart, and it's been sharp of late. Basically, about 100 million ounces have been sucked from the Comex silver registered pile since the Reddit Wall Street silver squeeze phenomenon began in early 2021. We're now nearing falling Comex registered silver warehouse inventory levels back where they were when the spot silver price basically tripled from early 2010 into early 2011. Silver bullion stackers are not only buying bullion hand over fist, they're also reveling in anonymously showing it off to one another in forums online where they rally around other like-minded bullion stackers. Moving on to the fact that the USA is now, by official data and cogent definition of words, in an economic recession. All while continually living in a state of seemingly eternal financial propaganda, where the literal head of the Treasury goes on Sunday morning news shows to confuse and gaslight typically elderly viewers with highfalutin semantics and economic quackery.
GDP will be closely watched. A common definition of recession is 2 negative quarters of GDP growth, or at least that's something that's been true in past recessions. When we've seen that, there has usually been a recession. But I do want to emphasize what a recession really means is a broad-based contraction in the economy. And even if that number is negative, we are not in a recession now. And I would warn that we should be not characterizing that as a recession.
I understand that, but you're splitting hairs. I mean, if the technical definition is 2 quarters of contraction, you're saying that's not a recession?
That's not the
No?
That's not the technical definition. There's an organization called the National Bureau of Economic Research that looks at a broad range of data in deciding whether or not there is a recession. And most of the data that they look at right now continues to be strong. I would be amazed if the NBER would declare this period to be a recession, even if it happens to have 2 quarters of negative growth. We've got a very strong labor market. When you're creating almost 400,000 jobs a month, that is not a recession.
Janet Yellen, the Secretary of Treasury, and obviously the former chair of the Federal Reserve.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Silver Eagles.
So click the link below for your chance to win.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part. The silver and gold spot price markets finally saw a rebound in price this past week of trading. The spot silver price closed in strong fashion above the important 20-ounce level, while the spot gold price moved up about 35 per ounce over the week's trading, closing around $17.65 bid price. The gold-silver ratio slid downward sharply below 87, and that brings me to my first point of discussion here. It was a question not only to you, but also to those who follow me on Twitter regarding how you think the remainder of this year will go for the 2 major monetary precious metals. The spot gold-silver ratio spiked early this week to 93, and my question for you and Twitter followers earlier today was, will that be the top for this year in 2022, or will we see 100 or beyond? One point to keep in mind here too, with how ridiculously high the gold-silver ratio already is at the moment. We're currently at levels higher than we hit during the worst stretch of the late 2008 global financial crisis, back when banks were literally failing. Back before infinite QE and eternal bailout policies kicked off ad infinitum. Of course, when we finally do indeed get around to finishing off the second half of the global financial crisis, all bets are off on how badly phony precious metal derivatives are going to perform. If the 2020 pandemic retail bullion shortage wasn't less than enough for you, back when the spot gold-silver ratio ballooned to the mid-120s as if it were the Great Depression in the 1930s, back then, in the physical bullion world, that number never got into the triple digits. Silver bullion goes missing, or premiums get priced so massively divergent that the level of GSR never gets to where the spot claims. In another global financial crisis, gold bullion is going to go missing, and premiums are going to get blown out as well. Speaking of escalating premiums in gold, they've been happening on the gold bullion coin side of our industry, as I warned you they would here about a month ago. The US Mint's Gold Eagle and Gold Buffalo coin production numbers are not keeping up with escalating ongoing gold bullion coin demand, and thus price premiums over spot on those most popular gold bullion coins, and thus nearly all other subsequent smaller bullion products, are rising in accordance. Now you can come back later this decade and check out this video and see if my contention here is proven correct, but my strong suggestion is that any gold bullion below 2,000 an ounce, in hand owned, long term, is value worth saving. That's it for this week. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.